following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Monday edition of, 4 days we're going to have this week. And my pleasure to be here Monday through Friday, if there is a Friday and if there is a Monday, right here. And most importantly, what we're looking at is a situation where the Greek debacle already came to a head over the weekend. Now, this is really interesting because it is not that often that crises occur at market within a percent or so of a market top. And the other thing that is very important is that if you start to get headlines at a top, you have to wonder whether or not you're going to get a shorter term decline, serious but shorter term decline, and then an attempt to make a new high, or it's telling you that the period that you're in is going to be under a lot more duress than we had seen many times before. And first of all, let me just say thank you to our hosts. We had great hosts this morning. Of course, as always, you got John Logan, 8 o'clock. You got Larry Perseverant, 9 o'clock. Tom Bryan, 10 o'clock. I come in at 11, do my best. And, of course, being Monday, after I come on, you've got Daryl. Let's see, Daryl comes on. Yep, noon. Daryl Martin. Then you've got let me say the new lineup. I just got to get it right. Oh, of course, Steve Rhodes. 1 o'clock, Steve Rhodes. 2 o'clock, you've got Dave White, and you've got Tom O'Brien back again. 3 to 5. Wow, what a program we've got for you today. Dow's down 199. Nope, Dow's down 200 at 17,746. S&P's down 22 at 2078. The comp index is down 63 at 5016. You've got gold now. You would think that gold would move a little bit on all this news, but in fact, gold is, got the GLD up 45 cents at 113.01. Gold's up about $6 or $8. No big deal there. The dollar, in fact, was moving much higher earlier. Now it's pulled back. It's at 95.48. What's important is that even crude oil is down 58.59, down $1. You've got platinum down. You've got high-grade copper down. You've got bonds. Now, this was fascinating. When I looked at the bond chart last night after the market opened, within 20, 30 minutes, you were looking at bonds up 3 points. So this morning, the TLT is at 117.36, up 2.13. That's big. Now, I will run the numbers, but I just want to show you something that I think is really interesting. The low that was made this morning, it was very early this morning, around about the 2054 area, round number 2054. Started a huge move. If you think about the move, it went from 2054 all the way to 2083. That's a 30-point move to the upside. It's days and days of trading that we've had recently. So that's very interesting. Now, look at this chart that I've got here. This is the 5-minute chart of the E-mini. I tell you why I want to show it. It's so fascinating. There's a technique that I developed and I talked about in my CD introducing the Chapman Wave methodology. This is it right here. I'll show it to you in a moment. It's called Introducing the Chapman Wave by Basil Chapman, and it is a CD that's only available at TFNN. It is part of the methodology that I've been working on I'm still working on it, but I've been working on for decades and, in fact, produced that CD. Now, it's got a bunch of titles, maybe 20-something chapters. That's not the issue. There's one chapter that I had that's called the 123. I haven't even got it written down there. Let me see. The exact title of it was The 1, 2, 3 buy signal. That's right, the 1, 2, 3 buy signal. Now, what's really important about that 1, 2, 3 buy signal is that after it moves to the upside, the Chapman wave, it's all about identifying the most obvious lowest left side bar and then counting each successively higher peak. Peak D is your objective. It can go higher. There's certain characteristics to look for when it goes higher. And at the same time, that's where you can get and often get the deepest, longest correction. That's why the fourth peak, peak D, is you've got to make sure that you count your peaks correctly. Well, look at this 5-minute chart of the E-mini. Went from the low bar this morning. In this particular instance, went from 2061.75 at 1:30 this morning, and it goes peak A, peak B, peak C, pulls back, double top, pulls back. Then whoops, it goes to a D, pulls back just for 3 bars, breaks out to a leg E. Then it pulls back even sharper than the previous pullback, goes under the 9-period moving average, and then there's just enough strength to retest the previous high, and there's no peak there, the new peak, and then suddenly goes to a peak F at 2079, round number, at 5 minutes to 5 this morning Eastern time, and then it plunges. And what does it do? It goes down, straight line, A, lowercase a, the trough's on the downside. But that's also trough 1. Then there's a peak 2, like an A minus that fails with the H pattern that breaks under the left side trough A low, and it slides all the way to 2068.75 for trough B. Well, that created a 1, 2, 3 pattern. The 1, 2, 3 pattern, think of it a little bit like an A to B equals C to D. It's actually more like a butterfly than a Gartley pattern. And then what happens is when it makes that low, you've got a nice divergence because the MACD and stochastic really start to move up strongly, and it goes peak A, B, C, and D. Now the whole aspect of this 1, 2, 3 buy signal is that it is really positive, and often it can even take you to a peak E and an F. But when you get a sell signal from that high, not only does it come back down, but it invariably takes out the left side low. This is a chart of the 1987 Dow daily chart, and that went to a 1, 2, 3 buy signal in June of 1987, pulls back, and then has a whopping move to the, at that time, the all-time high back in August. I think it was August of 2018 or 21st. I can't remember because I was doing the Chapman Wave methodology. Fidelity Investments was my first big institutional client, and I said, I'm getting a sell signal, but I've got a D in my daily closing price pencil chart. But I didn't want to give a sell signal yet because it looked like there was enough strength, and pop, it went to that extra leg up. And in that chart, the daily chart, it went to, I believe, an E, and then it turned down. I got my sell signal. In this case, it went to a daily peak F, and then it pulled back, and then a bunch of other things happened. It gave a 0, an exact right shoulder failure, and an exact, I think it was 2640 or something like that, exact unchanged close on that peak right there. And I'd said, when I get a 0% change, if there's a minus 40 to a minus 60 move by 12 o'clock this morning, we're going down really sharply. And that's that big move down there. So that's the 1, 2, 3 buy signal. Well, we just got it. I just wanted to demonstrate it because then this is a cartoon that I sent to the Boston Globe straight after that crash. I sent it off to, I used to do cartoons. It says, oh my gosh, what do you say to a 500-point drop? So the guy says, his wife says, oops. All right, so enough for that. That's the 1, 2, 3 buy signal. And there it is. We're about to test the 2069.50, no, 2068.75 low at 35 minutes past 6 o'clock this morning. The Dow has just gone to the E-mini has gone to 2068.75. There it is. That's the technique. And there's another A to B equals C to D. Oh, what a fascinating market. Let's just get rid of this and we go on to our story. And the story is, I thought this was so fascinating. My wife always berates me. She says, why do you keep those old papers? Why? What do you do with them? I say, look, I have a live show. Not only that, I have a newsletter. And I always like to refer back to things because history repeats over and over again. So I'm busy doing some cleanup yesterday. Lo and behold, I find this board, this cork board that I put in a hole of Petronas Towers back in 1965 or something. I just got all these things that maybe 6 or 7 Xerox sheets or original sheets from the newspaper, and I just pin them here, and I don't even look at them for years sometimes. So I'm looking at this. I say, hey, wait a minute. What on earth is this? It says exchange-free fall stuns Greek investors. And I read, and it says hundreds of investors gathered at the stock exchange in Athens after the general index dropped to its lowest point since August. Oh my, I thought, that is, what is this? Boston Globe World section, Thursday, March the 16th, 2000. Do things repeat, or do things repeat? Unbelievable. Premier Kostas Simitis even called early elections last month to take advantage of the healthy economy. Listen to this. Last summer, thousands of Greeks flocked to the Athens Stock Exchange to experience the thrill of watching the investments hit the roof. It was boom time on one of the world's hottest trading floors. Some neophyte investors used their stock earnings for down payments on extravagances such as luxury cars. Gee, am I reading this? Is this China or is this Greece? Wait a minute, it's Greece. But this week, crowds raced to the exchange to witness their stocks in free fall. We want our money, chanted some of the hundreds of distraught small-time investors as riot police looked on and brokers slipped out the back door. Oh my goodness, is this, I lost not only my money, but the money of my clients who will one day kill me, groaned Lambros Yanoulis, a 57-year-old investment advisor. Other investors said they gambled everything. So many people sold their land, their sleep, their goats, and everything else to raise money. So many are near suicide, said one small investor who refused to give his name. I sold my tractor in the village thinking I would raise enough to buy a second one. Now I've lost the first one, said another. It's so sad. Human nature, we tend to do this. It's not them, it's all of us. Many people who've invested in the stock market have had experiences that are really unpleasant at certain times. So let's look at this and try to be as pragmatic as possible. Let me show you something. Right here. This is what I show my subscribers every day. Oh, look at that VIX index. The VIX is at 17.09. It's in leg D, so we might even get a little turn. I'm thinking that today we actually don't get the turn because everybody's expecting that so often the market's been saved on these big down days, and we'll see. But at this particular point, that VIX has spiraled from the 1193 area to 17.14. That's 6 points. That's almost a 48% rally in the volatility index. And one of the reasons why I want my subscribers to get right back into our VIX long position, even if it was a small position, was because it seemed to me that the pattern that we identified was about in the Dow, in that rising trading up channel, was about to test at some point very soon the 17,730s. Today, the low so far is 17,731. We're down 207. We're about to go to a break. We've got Garo in Newport Beach. Garo, how are you? What did you want to look at just before we go to the break? I'll check it out. Garo?
Yes, sir.
Yeah, you wanted to look at?
Walter Energy, WLT.
All right, we'll be back in a moment. We'll be back with Garo from Newport Beach, California. I remember driving past Newport Beach, pretty place. I'll be right back.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and we're on with Garo in Newport Beach. Garo, did you want to look at WLT, Walter Energy?
Yes, sir. It's only 25 cents.
Yeah, that's what I'm wondering.
I have no position at all in this stock. I was shorting this stock when it was in 2013, when it was on high 37. It's 5 years ago. This was $200, almost $200, not
Right.
25 cents. Don't you think that some company will buy this, or there's an opportunity if I buy, let's say, 10,000 shares and keep it? 10,000 shares, and I keep it. If it goes down 50%, I will lose $1,300, which I can make that $1,300 on something else.
Right.
But do you think the opportunity that if I buy 10,000 shares and hold it, just hold it and see what will happen? You do that? Yeah.
Whoa. I have to talk about something, and this is very interesting. It was at 143.76 in April of 2011. Now, what's really important is that you're thinking in a pragmatic sort of way is exactly right. There's just one problem, that I don't know where the stock stands right now. But if they do, and this is what companies do, if they declare bankruptcy or Chapter 11 or something like that, all of a sudden, you're not trading the same shares. So they've taken your shares away, and then they issue a new whatever the new share is, WLT gets a dot something or other.
Yes.
And
Yes.
in other words, you would look. If I was looking at the chart, I could turn around in a month's time and say, "Oh my God, it's at 75 cents. Oh, Garo must have made a fortune." And then you call up and I say, "Wow, congratulations!" And you say, "Yeah, except for one thing, I don't have those shares anymore. They just wiped them out. They've got new shares, and I don't have any of the new shares." That's, you see.
Yeah.
Now, I've not had that exact same thing happen to me. I've had it where I remember I bought a long time ago. In fact, I found the shares just recently. One of the gold stocks, a silver stock. Oh, it was so long ago. I bought it quite a lot, and I kind of forgot about it. I actually bought some for my daughter, my son, and my wife, and I forgot about it. I did it, and I just left it because it was going to be a long term. I thought, how could it go wrong?
You're right.
Well, I went wrong. They just disappeared. Well, the company came back. I can't remember now if it came back with a different name or it came back. I didn't have the shares. And then when it did well after that in its subsequent rally, I was not there. That's what you got to be careful of. That's what you should actually try to find. Maybe if you got a broker, you could actually call, ask them what the situation would be. I'd say if they already you know what? There's a reason why it's at 24 cents. And there's a reason why. Yes, it had huge volume on Friday. That was 9.4 million. My suspicion is that those weren't all buyers. Those were people that maybe just got in for a quick trade. But I would not be surprised if a stock that was doing magnificently up in the 140s just a few years ago, down in the 25 cents, isn't there for a really good reason. So your thinking is correct, but your technical application could be totally wrong.
Yes. Very good. I listen. I always listen to the masters. I do thank you for your take, sir. Yeah.
The masters become masters because of their experience. I always say, I not only got a bachelor's degree in the School of Hard Knocks, I got a master's degree and then a doctorate, and then I kept going for a postdoctorate. And you just try to learn from those mistakes, and slowly but surely, you try to make less and less of the dumb ones.
Absolutely.
Yeah.
Absolutely. I do thank you very much, sir, for your time and listening to me. Thank you, sir.
Thank you. I would still, don't just take my word, I'd still do a little research on what are the possibilities if you held the stock, and if it isn't in Chapter 11, or if it doesn't go bankrupt or declare whatever it is, what are the chances of losing your position? That's all. And if you don't, if there's no chance, that's different. Thanks for calling.
Thank you, sir. Thank you.
Okay, good. That's Garo in Newport Beach. Now, folks, I wanted to talk about a couple of things. I wanted to talk about the market. This weekend, I send out a lot of charts to my subscribers. And if you're a new subscriber, don't forget that when my newsletter comes out, you have to go to the site, type in your password. That's all you do is type in your password, and my charts start coming there over the weekend. Saturday, they're there. And then I add to them all the way maybe to Sunday night. And then Monday, I repeat those ones. And I add to them. And also, what's interesting about this week, this is a critical week for many reasons, and I'll talk about it as soon as we get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour, and the Dow's down 208. S&P's down 24. Now, a couple of things I wanted to mention. In the bonds, you remember the Japanization of our bond yields, etc.? I've been talking about it, for 10, 12 years. Not the issue. The issue is that this down channel in the monthly chart of the yield, look at the yield, 30-year yield, TYX.X, is still within the down channel, hasn't made a low in this move over the last couple of weeks, but it did, and that moved down to, I've got what's a moving target because it's a continuous contract, 22.26, 2.26. So it's very interesting. We've just gotten into the Chapman wave inside track repellent zone of the yield. That's number one. That's the monthly chart. Look, if I squeeze it, let me give it a good squeeze. There, look at that squeeze. Look at that, unbelievable. From 1984 was the May of 84. You got that big spike. And then all of a sudden the channel starts, and it's a down channel, beautiful down channel. And I've lost the same channel in the, let me just see if I can get it here for a second. Yeah, I've lost the data that somebody must have bought them out. Now they've got different data. So let's go back to the TYX. Thank goodness I've got that. TYX shows it beautifully. And it actually shows it if you go back, look, if you go back as much as I can to September of 81, you were way up at 115.2. Some folks around here remember those yields back there in the 80s. Now, what's interesting about this particular chart is that the Japanization of our bond yields is still continuing, and it won't change until yields are up in the 4.7 area. Then you've broken the 200-period moving average for the first time since you broke down. The last time you broke down was October of 1987. Gee, October of 1987. Wasn't I just talking about in October of 1987? Yeah, that was the crash of 87, October the 19th. So now what we're looking at is that nothing has really changed for the Japanization of our bond yields at this particular point. Look at the yield itself. It went to leg E in the weekly chart, missed the 200-period moving average of 32.92 last week, went to 32.55, pretty darn close. Hit that trend line, the Chapman wave inside wedge. Look at the left side, right side price time match, which it went to and then broke above. This is going to be very interesting. Why? Because the stochastics at 87%. The MACD is still very strong in the yield. You're talking about the yield. But what I do have in the daily is that however I count it, you've got a high of 32.22 and then a high of 32.21. Do I call that a phantom C? And this is a D, or is it suggesting that we could still make one little bit of a lunge towards a higher high? Now, there was a Chapman wave instant restart right there, that peak D. Remember we were talking about Ds before? So Ds where you can have a sharper pullback, or you could have a restart where you continue higher. Well, in this case, if there is a restart, that becomes an A, that becomes a B, especially since the MACD didn't drop all that much. This becomes a C, that becomes a D, and now you've got yourself an E, an overlapping. You see, the whole beauty of the Chapman wave methodology is not because some people think, oh man, you're getting confused. No, there's no confusion whatsoever. What is basically a pattern that can change is that you've got a breakout in the Chapman wave cup and ladle formation that very often can go to a D. So that suggests, yeah, you could still go to a D, but it's real simple, because if there is a close below 30.46, the low of the 19th of June in the yield, then absolutely, I'm considering that this has two patterns that I'm looking at. One is that it could be a right arm, Chapman wave right arm extension and breakdown, gap. Look, there's a little island gap there with this bar from Friday. Or it is, in fact, an overlapping wave, and I've got A, B, C, D, and this is E, and it becomes a peak E if we close below 30, let's call it 3101. Probably I should be a little bit safer and say 30.38. That's to be really safe. Close below that, it's a peak. You have to start a brand new buy signal after that. So let's just deal with the numbers, and the numbers say, and this is really fascinating. You remember what I was talking about in the weekly chart of my triple yield chart, which I show my subscribers this morning. Every week we look at it. Here's the white one is the 30-year. There's that peak E if there's no new high above 32.22. 32.55. I forgot to type that in. 32.55. You go above that by 1 penny, and all of a sudden you've got something very bullish for yields, bearish for bonds. So just real simple. Those are the numbers. Now here's going to be what's absolutely fascinating to me. The fact that almost always in this particular chart, you can go back as long as you want, go back all the way to 2009. You can go to a D, but often you go to an E and then you pull back. Look, a D and then an E very soon afterwards, and you pull back. Weekly chart soon doesn't mean right away. It means in a couple of weeks. And now look what's going on. D, and a couple of weeks later, E at 47.89. All those 47s and 48s at E. Then you pull back sharply, and then all of a sudden you plunge from the 48s down to 24.52. And you start at A, B, C, D, and an E at 32.84, and you come back down. Patterns repeat over and over. A, B, C, D, and you pull back sharply. But this was the first time you got something different, because you went to E, F, and a G at 39.74. Back, was that January of 2014. So this is going to be very interesting for us. Why? Because there's a chance that we're repeating this pattern. I said last week, there's a chance we can still go to an E. Then we've got to watch to see what happens. And this exact 24.22, what is it? 32.22. Wrong. This is the 10-year. 24. 89, 24, 89, exact to the penny double top a D in the 10-year, and the 5-year never even made a D. So we're looking at something here that's just a little bit different. So now let's put this together. Let me just bring you back. Exchange freefall stuns Greek investors. March of 2000. Oh, God, it just goes over and over and over. So now what we've got is a situation, and that was what? Just someone remind me again. March of 2000 was what? It was the all-time high for the S&P and the Nasdaq, right? The semis, I think, went a month later or something like that. So we've got to put this into a serious context that we could be having the same kind of crisis here. And I said to you before, it's a little unusual to have the conclusion of the crisis coming to a head when you're just a couple of percentage points off the top, which we were just up until Friday. And now we've got to look at it and say, okay, let's just take this as the first. Remember, I said you've got to have a dark cloud cover, bad news, that's interpreted by the market as bad news, and you've got to have a volatility index that's rallying. Wait a minute, volatility index? That's the dollar VIX.X. And wait a minute, look at that spiral. This is still only a leg A. I'm calling it an A for now. And finally, you've got the weekly chart breaking above the 200-period exponential moving average in a leg B, the first leg B that we've had. And what it suggests very often that you should go to at least a C in the VIX index. So let's just say that's first 2 hours of the trading week and the trading day. You can't make assumptions about a weekly chart other than to say on price alone, regardless of where we close, this is the first big break above 16 that we've seen since February, the week of February the 13th of this year, where it went to 1928. So I'm taking this seriously. And when you get to the volatility index in the monthly chart, this is the cup formation. It's more like a bowl formation that we're looking at. It's kind of a rough bowl. And I don't want to even talk about it. We've got another day to go. Let's see where the monthly closes. Because right now, at 1737, this is one of the best moves that the VIX index has had to the start of a week since way back in December of last year. So let's just treat one thing at a time. Whew, that's a lot to go through. Now I want you to do something that said, when does your left side, right side price match meet on the monthly? Wait, are we talking about which? Are you talking about the VIX? I don't even want to go there. The VIX index? Oh, that'll be a long time. The rhythm here is a little bit different. In the monthly chart, how can I answer that question? I want to be as cogent as possible. Yes, okay. The way I'm looking at it now is that you see these mini cup formations within the very large context of the monthly. See this big spike there and a big spike there and then a big spike, then a big spike, another one, another one, another one, shorter, shorter, shorter. Then it goes back longer. The way I'm looking at it right now, it suggests 19.98 is the 200-period exponential moving average. If I draw a trend line that takes me to the left side, 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6, 7, 8. I believe this is the 9th bar. So if I go left side, right side, I can only do it a little mini basis like this. Right here. It's going to make it look messy. I don't like messes, but I'll do it. All right, have a look at that. And now I'm going to put in the right side and make it green. Run your parallel, green, and that suggests right there. Okay, that suggests, based on the monthly chart right there, that suggests that by the month of September, oh, that's a long time, isn't it? The high of 25.20 that was made in December of last year could be challenged. You know, I don't really like to do these on a monthly when I'm doing it short term. In a monthly, I want the very big picture. So I'm going to skip that. And all I'm going to suggest is that if this is B, when B starts to accelerate, it has to keep going, because if B at 17.41 right now closes this week or next week under 14.43, we're just in a really choppy scenario, and all you got to do is keep looking at the Dow right here and say, hey, choppy can last a lot longer than your patience. All right, so this is, hey, I can project out. I have numbers in the back of my head. I've already circled it right there, and my target is for the week of second week of July, around about the week of the 13th, that the Dow is testing 17,500. Remember, I've said for a long time, 17,500s on the Dow is major support. A close below 17,500s opens up the possibility of going quite a bit lower. So, and that's actually on a weekly basis. All right. So I don't want to get, you know what, we got the sell signals. We're in key indices that are tanking right now. That's subscribers. We have no long positions, only short positions, and we have long positions of short positions, just to be clear, but they're all short positions. I don't want to make projections. This is just the beginning of the week. I want to see where we close. We could still have an intraday turnaround. After all, didn't I just say we've got a leg D? Look, leg D right here in the 120-minute chart. Went even higher. 1744 was the high, that most recent high. And it's a gap to a D. I got to watch this real closely. We spiraled through the cup and ladle now in the 120-minute chart of the VIX. And I always say D's where you've got to start being a little bit careful. And here you've gone to a low in the D. Look here. Let me just do this here. See the left side to the right side of the cup formation from the peak F top at 18,188 in the 120-minute chart? And what I said here for my subscribers' support at 17,800s to 17,020s will be the key. And what is the low today so far? The low is 17,726, right? We're right there. And this is leg D to the downside. We've got a D in the trough D. We haven't made a trough. It's a leg D to the downside. And we have on the upside gone to a leg D in the 120-minute chart of the VIX. And the rule is in a couple ladle pattern, when you break out, it should take you to a D. After D, you've got to be a little bit careful because you could come back and test the left side lip. So a lot of things are going on. But the way the daily chart patterns are forming, I don't think this is just going to stop on a dime. I think it's going to quite a bit lower. Let me just see if there are any questions and other questions in the den. That was the left side, right side. Okay, question. Saratoga Bob, the Chapman wave and the 90 EMA rocks. Perfect. Biking weather up here. Have a great trading day. I love the way Bob trades. He puts on his trades. He does all his diligence and everything, and he puts it in a trader, and he goes biking. That is just the best scenario you could ever have, and he has done unbelievably well. Congratulations, Bob. You are definitely a person to be admired for your ability to plan your trade your plan, and trade your bike trip. That's the best way. Well, plan your bike trip and trade your bike trip. I like that every day. So now the other thing is this, that the short-term trading index is at 1.38 with a day like this. It did hit 212. And that's suggestive of a move within 2 days that from a low, you could have a sudden big move to the upside. We've already had one today of 15, I said it was 15 points or so in the S&P. I'll be right back, and we'll go to John in New York. John, you wanted to talk about?
Hazel, I wanted to look at the Chinese stock market.
Okay, we'll be back with John straight off.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
We're back just a moment. I just wanted to tell who was it that asked me about a question I had about Tree, T-R-E-E, and that was Joyce. Joyce, Tree is trading at 77.84. It's Lending Tree Inc. It's been spectacular. It looks good, and it still looks good. I think if it consolidates, it's at 77.84. It'll consolidate to 73 to 71. That's the area that on a longer term basis, but short term, I would say that the 75 to 74 area looks like it should hold. It's doing well in this market. I'll do a little bit more on it, and I did send you some information, and I will try to do a little bit more. Let's go back, and we've got John and Jennifer. So, John, you want to look at the Chinese markets. Do you have a position at all?
No, I just was, real interested to see what you think about what's been going on there. I know the market's been, straight up, straight down.
Right. That's what I call the capital A. It looks like the Eiffel Tower. It does it very often. The FXI. Now, there are different Japanese markets. So let me just do the iShares of the China Large Cap ETF. The FXI at 45.23, down 97. It's making a peak. It made a peak F top way back at 72.26 in October of 2007. Plunged in 1935, October 2008. Now it's gone to a peak E in an up channel, and it's also a Chapman wave inside reversal zone, which it has reversed from at peak E, and that suggests that 44 is a really important 9-period moving average support in the monthly. It is under 47, which is the 9-period moving average support in the weekly. My suspicion from the daily is that we're going to see how the 200-period moving average of 44.65, and that's the EMA and the SMA at 43.57. That's a very important area. From the look of the chart, even if it bounces, my suspicion is that the FXI is going to come down a little bit further, but the 43s is where it has to hold. Between now, the 44 area and 43, that's really important. If it just goes right through that, that's not very good. And now the other one that I'm looking at here is the Dow Jones SH, which is the Shanghai market, and that has an even more precipitous down move in the daily. Well, I shouldn't say it's sharp, but the weekly chart has just gone straight down, and the monthly chart only went to a C. I've got ways of counting it, and no matter how I count it, that's a C in the Dow Jones Shanghai market. So I've got to try to find the original, but I don't like it at all. I think that it's going down further, and that any bounce in the FXI, if that's the one that you watch the most, FXI says any bounce between 47 and 48.50, if that starts to fail, it's going to come back and retest, and then the next move down could be even sharper. It doesn't look good at all. Hope that helps you.
Thanks a lot, Basil.
Thank you very much for calling. I always appreciate it. John in New York. Let's go to Jennifer in Wellesley, town next door to me. Hi, Jennifer. You're looking at?
Biogen.
So do you have a position?
Yes, I have I'm underwater, and I have it's a large part of my portfolio, and I don't know how much pain is going to happen over this Greek thing, and whether I should just hold on to it or.
You see, for my subscribers, I've got a sell signal, and we are short the IBB. And the only reason is I had an alternate count, a special technique that I have called the Chapman. Is a very complicated Chapman wave unconventional instant restart. It sounds very complicated. It actually is quite a simple technique, but you have to identify it. I think I've identified it correctly. And that says to me that there's a good chance that the weekly chart is making an E. Now, the moment there's a bounce in this market, you should see the IBB respond. It didn't do that on Friday. It didn't do that on Thursday. It didn't do that on Tuesday. I'm very concerned. I think that, now, this is just my word, and I've been kind of bearish on the IBB at different times. We've been correct at times and not correct at others. So I'm going to do this, if you don't mind. I'm going to say to you, I don't want you just to jump out of the BIIB, but I'll do tomorrow or Wednesday, I'll do a much more detailed analysis. I'm just going to say to you, keep some kind of a stop on some part of your position, maybe at 400 or 399, take a little bit.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.